Hi, this is Jonathan Jay. This is one of my behind the scenes podcast videos where you'll see and hear a podcast being recorded. This particular one is a little bit different to my usual podcast content because it's an interview with a business broker. Yes, I've gone over to the dark side and I'm interviewing a business broker, but you'll find that this is very, very refreshing because we don't actually disagree on very much at all. In fact, we are very, very aligned about what it takes to buy a business and what it takes to sell a business. In fact, he might actually become my favorite business broker. I hope you enjoy it.
So what's your background, Rob? I know that you've been in business for a long time.
Yeah, I feel old.
Don't we all?
I spent the first 20 years in banking, and then the last 20 years in M&A. So I've been both sides of the table on the negotiating table. I'm known, and Evolution is known as a sell-side advisor, but Evolution does work for acquirers and investors. So we understand, we can empathize with both sides. Mm-hmm. We've done investment fundraising. I've done investment fundraising, and we do a growth to exit. So we prepare companies for sale, which makes us a bit different to our competitors on the sell side, mm-hmm. because they're really only interested in retained work, and they don't care whether it's an unrealistic price or not. What they want is the retainer. And I worked for a company previously where that was the focus, and they're not unusual. That is quite normal. And I left them in 2008 and set up what became Evolution. And we're the revert. We've switched it on its head, which is we're pretty selective who we take to market and when, and we're very realistic on price, which is one of our common touch points.
Yes.
Also, we want committed. We call it committed. You call them motivated. It's the same thing. Sellers, because they waste everyone's time if they're fickle. So that's why we charge them a large retainer, because there's nothing that concentrates the mind more than paying a monthly retainer if you're selling.
Absolutely, and you weed out all the people who are playing with the idea of selling if they get the right offer type people. Where it's never going to be the right offer.
Yeah, I mean, in a normal year, just to give an idea of scale, in a normal year, i.e. not this year, 12 to 15 sell mandates, and we sell 3/4. It hovers between 73 and 78%. And that's born out of all the things I've just mentioned: realistic price,
yes,
operations, and we use competitive tension, just like you do, but on the other side. Mm-hmm, mm-hmm. And I'm sure you've done it when you've sold businesses.
Of course.
It's hard to get across sometimes to the audience that it's actually different rules apply, and just it isn't one size fits all. So I spent 20 years working in M&A, 12 of those 20 years working for myself. So I started Evolution as a one-man band from a bedroom and a broadband connection. Having been on 300 grand a year in my M&A corporate job.
So you must have worked for one of the.
You can see on LinkedIn who I used to work for.
Oh, really? Okay.
In fact,
we're on the dark side.
Yeah. So I work for, and they're a good company. And they're a large player. 15 million turnover I got it to from 1.5 million. So I took them as GM from an average SME to a large SME. But there was a couple of things that weren't right with the model in my view, and I wasn't a shareholder, so I couldn't change it.
Yeah, no, it's a good company. In fact, actually, I looked at them for selling one of mine about 5 years ago.
Right.
So yes, and actually they successfully sold a business of a friend of mine. So, but yeah, it's a different model. It's very much a mass market model.
It is, because up until the last couple of months, they had 160 staff. So that's a lot of mouths to feed on payroll.
Yeah,
but
you're working for me at the moment. one of them might be working for me.
It's like everything, isn't it? There's some good people in there. It's
Yes.
just a large beast. And when the market contracts on the sell side, it's hard. And I know the owners, they care about the staff. And they've been around 30 years. So they're a large player in the SME market, and they've been around a long time. What I wanted to change when I left them was that the person who sold them the dream, i.e. took them on as a client to sell, was the one who delivered the transaction. And that doesn't happen. And it never did. There's a separate sales force to the people then that go ahead. Once someone becomes a client and starts paying money, it's a project team. And I wanted to change that because I wanted accountability. And it's amazing how sales guys, when they know they've got to deliver the end goal, which is to get it over the line and complete, suddenly become circumspect about what they say to get the order in the first place.
Yeah, they tone it down a little bit. And I was talking to someone, in fact, actually my colleague in the nursery business, and we encounter a lot of businesses that we approach directly that are represented by a broker, and the broker's valuation is actually miles apart from what we would be prepared to pay, and we've got to bridge that gap somehow, bridge that gap of expectations. And it was explained to me with one or two particular brokers, the person who signs up the business, clearly the higher the valuation that they place upon the business that they're signing up, the more that business is going to pay an upfront fee because it's on a sliding scale. But the more they pay an upfront fee, the more commission the person gets who signs them up. Therefore, to say your business is worth £1 million and therefore it's a £10,000 upfront fee is actually, and they get sort of maybe £2,000 of that. They wouldn't get that £2,000 if they said your business is only worth 250.
Yeah, you're right. And it's something I've battled with for 20 years, really, because most sellers have never sold before. Not all, but most of them haven't. So they're fairly usually inexperienced. And we lose business. Evolution loses business to other brokers because we have an honest conversation up front about value. And it's become a source of amusement now. I've gotten used to it when they say, well, you're in a beauty parade, Rob, and we're interviewing 3 or 4 other brokers. I said, well, we're not a broker, we're an advisor, but carry on. We actually do some work. We don't just list it and hope for the best. You say you think it's worth 3 to 4 million, but I've been told that it's at least 5, maybe 6 or 7 million. I said, okay, well, why don't you go with them then? But make sure in the contract you sign that if they don't get something north of 5 million, they refund all of your retainer. Every penny. Can they do that? Have a go. And we track when we lose business because either we're not telling them what they want to hear, or they think we're too expensive. We contact them a year down the line to see if it's sold religiously, and invariably it hasn't. And I was going to do. I haven't done this yet because I haven't plucked up the courage. But some sort of marketing strap line. If your broker is broken, we can fix it. Because
I think that's rather good.
Do you like it? Yeah. I might do it when I've semi-retired from Evolution. We've rescued businesses that haven't sold. They come back to us and say, well, okay, well, maybe we picked the wrong advisor, broker. I'd say, well, okay, so tell us what didn't happen. It usually is very little offers or no meetings at all, or the offers that do come in are derisory in inverted commas. So you say, well, let's have the look at the IAM and let's look at the research list that, and we can identify what went wrong usually. So then we say, well, look, if you'd picked us first time round, this is the approach we would have taken. These are the differences. And they go, brilliant. So I said, Great. So it's we're happy to be engaged by you. It's £4,000 a month and 3% at the back end. And they said, well, I've already spent money with the other broker. Oh dear. I said, yeah. I actually, why would I want to do it for free? Because you made a poor choice.
Exactly.
In fact, we do play with it sometimes and say, in fact, we should be charging you more than £4,000 a month, because now you've gone out to the market. So, you've made our job even harder. So the price should go up. So we will do it on our normal terms. And we've been engaged by people who tried to go, went elsewhere, it failed, and come back. And then we've got it over the line. But it's just really drawn out. And so you and I, that's one of our other common areas, is brokers that are not up to the job, as well as accountants and lawyers are not up to the job.
Yeah, I mean, and this is the thing. I mean, they're not all created equally, and some are. There's always, in every sector, every profession, there's going to be people who are great at what they do, people who are dreadful, and then everything in between.
Yeah,
and it's really hard to identify. Which are good, which are average, and which are terrible, just from a website, isn't it?
Well, I could tell from the one that you put out a few weeks ago, where you'd instructed them to sell your business.
Yeah. So just
that was painful to listen to.
Yeah. So for the benefit of the listeners, this was a video on my YouTube channel of me dissecting a mystery shop of an advisor that we'd paid a considerable sum of money up front. They weren't getting any traction, which I thought was really surprising. So it was a great business that we were selling, very profitable business in a very understood sector. There was nothing sort of zany or crazy about it. And I got a friend to mystery shop, and as you say, Rob, it was absolutely diabolical.
Yeah. It was. I mean, it was cringeworthy. Is the business still for sale?
I actually sold it myself. So I did a reverse process of what I do to find sellers. I went out and found a buyer, and it was a very happy deal. We were all, it was a trade buyer.
Yeah.
And we did the deal very quickly.
That's a shame. I was going to say, you could instruct Evolution and you could mystery shop us anytime. I'm confident in my team.
You know something, maybe I wish I had met you 4 or 5 years ago, whenever it was.
Our average multiple is 9.2 over the last 3 years.
and what type of business would that be for? Do you have a type of business that you prefer to sell?
Yes. Ones with committed sellers.
Yes.
Ones that have had some degree of preparation for sale.
Yeah.
And if that hasn't been done, we can offer that as a front end bolt-on service. So we'd rather spend a year or two working with a potential seller, getting their ducks in a row, making it marketable, rather than go in and try and, sign them up for execution of a sale and hope for the best, which, many brokers I know try to do that. We'd rather play the long game. So it can take several years. But yeah, I mean, we're industry agnostic. With years of doing this, you build up a sense of what's likely to sell and what's not. And we're honest enough in the Evolution team to be able to say, look, this isn't saleable for these reasons. Or you can sell it, but you're going to sell it at a big discount. So what do you want to do? Do you want to sell it today at a discount, or do you want to work on the business and get it sale ready and iron out some of these things, like things like financial reporting isn't robust, like it doesn't exist.
Yeah.
I can see that resonates with you.
Well, I mean, some sectors better than others. The larger the business, the more likely they are to have some proper management accounts. But the smaller businesses, the sub 1 million revenue, they operate off the bank account.
Yeah.
have they got enough money left at the end of the month? That's the sort of the deciding factor. So we kind of give up on trying to extract that type of information, but the price accordingly reduces because there's more risk. We don't know exactly what we're buying. I mean, we do really, but it's all part of the dance that both sides play, isn't it?
It is, and although we're industry agnostic, we won't really look at a business below 5 million turnover. So 5 to 30 million turnover is our sweet spot. So it's lower mid cap.
Which is always going to get a higher multiple because of the size.
Yeah, and usually it's more sophisticated, although I wouldn't assume that in every case. But also it's harder work selling a small business. And we make our profit on the success fee at the back end. So I'd much rather sell a business for 20 million than 200,000. And it's harder work selling a small business and less money. So it's
yes. And I would suggest that maybe part of what makes it harder work is the mentality of the owner, because I think there is a very different mindset of someone who's built a business to 500,000 of revenue compared to someone who's built a business to 25 million of revenue. And there's a different level of professionalism required. Not saying that owners of the small businesses are unprofessional, but they don't need to be as professional because they're not doing 25 million a year with all the audit responsibilities and so forth.
Yeah, exactly. And we did, when I first started from my bedroom and broadband connection, there wasn't any minimum threshold on turnover. I just wanted to get some traction in a startup. But I soon learned over the years, it was so hard to sell those businesses because usually a business owner of a business turning over a couple of 100,000 or so, they are usually the business. They are a legend in their own lunchtime. Mm-hmm. And that really, the one thing they're not selling, of course, is them. and
absolutely.
They're in the middle of it.
They want out instantly. And again, the owners of these larger businesses, especially if they're selling to private equity, realize they're going to roll some of their shares. They're going to be with the business for another 3 years, but they also realize that they're going to make money on the secondary buyout. Maybe more than on the first one. So there's a longer term mentality, I think. But having said that, most of my clients are buying at the lower end of the market because they're looking for bolt-ons to what they do. Just like the owner of the balloon, the person who bought the balloon printing business, for £50,000. He can acquire a business that adds 200,000 to his bottom line. Now that moves the needle on his business, and he can do the deal in 3 weeks. The advantage. I mean, so there's pros and cons, and it depends. If you are making your money from success fees, then quite clearly it makes so much more sense to go for the bigger deals, unless you have 160 staff like the company we were talking about, where it's a volume business.
Yeah, and I guess one of the things that we face, particularly in the sales side, that there's such a small low conversion rate of successful sales. It's less than 1 in 5 reportedly sell, and that's been my experience in the last 20 years. That's not a weird figure. It's a low figure. That's a combination, in my view, of intermediaries that aren't up to the job, but also sellers thinking they can do it themselves, and yet they've never done it before. I dare say, when I get toothache, I dare say I could look on YouTube, find a few videos on root canal work, and do it myself.
I use a similar analogy. Absolutely. Absolutely. And we bought one the other week. Well, the other week was like 5 weeks ago, where the owner had come to see me. And I know that's a point of contention with some of my detractors, shall we say, on LinkedIn, where they find it absolutely outrageous that I should ask people who are selling a business to come to visit my office rather than go to visit them. But again, it depends which side of the negotiating table you're on. It depends which argument you are backing.
Yes, exactly. I totally concur with you. I think.
But this woman came to see me, and she was I remember the conversation slightly. I mean, it was actually about a year and a half ago, but I went back through my emails and I found an email from her where she said she's absolutely adamant that her business, £200,000 day one. And we just weren't interested because if we were going to spend £200,000, we could buy several businesses. We could spread our risk. We're not going to put all our eggs in one basket. Why would we? And we bought that business 5 weeks ago for £12,000. We were happy to pay that all on day one, by the way. Didn't want to do a deferred on that. To be fair, it's been a little bit of a exciting ride since then.
Bit of a roller coaster, John.
Bit of a roller coaster. But the thing is, though, if you don't, you can't expect it all to be plain sailing if you're effectively buying it on an amount that you could, not suggesting anyone should, but you could put it on a credit card. You do find a few skeletons, but we do an asset purchase to limit our potential liability, and we've actually bought the business 5 weeks ago, but there was a bit that the lease part that was a little bit touch and go that we're hopefully completing on today. But it depends which side of the fence you're on. If you want to buy businesses and you don't have much capital, or you don't have access to capital, then you've got to be more creative. You can't go after the prime businesses that you are selling, Rob. So you have to cut your cloth accordingly.
Look, it's a thing, and having looked into the space that you occupy and occupy well, it's definitely a thing. It's a huge industry, as you and I know, and there's different compartments in it. I mean, our multiples swing between 3.4 multiple of EBITDA, adjusted EBITDA, proper profit. And
that word adjusted. I don't like that word adjusted. I don't like that. I don't like adjusted.
Can we call it normalized?
Normalized. Okay. Normalized. Normalized.
But it swings between just over 3 to 26. Right. And so our average of 9.2, that's a mathematical average, but it might be that when we sit down with a prospective client and they say, value my business, we don't answer that question straight away. We ask them, what does the business need to be worth for you to move on? What's your magic number?
Yeah.
But it's got in their head that we somehow come up with a precise valuation, and we want to know their aspirational price.
Yeah.
Then we'll value it in a realistic, prudent way, like an accountant might, and say, look, and there's usually a gap then.
Yes.
So we do a lot of work. Buyers like us and VCs, private equity, because we've gone through that work of educating the seller to have a minimum walkaway price and an aspirational. And there's nothing wrong with that. And the eventual deal value will be somewhere between the two, probably.
Mm-hmm.
So that means that when we go into a negotiation meeting with a company on the other side of the table, we've already got a client that's realistic about price. Yes. What we can't determine using competitive tension in the way that we do is that we use competitive tension to drive up price and improve terms, just like you do on the buy side to get exclusivity and get into heads, get head sign. It's the same principle used in a different way for the benefit of the person you're representing.
It's the same set of principles, just used in reverse.
Yes.
And it would be somewhat hypocritical to be derisory about those approaches and principles when they are actually being used on the sell side as well.
Yes, that's right, and it exists because where you've got choice, you've got a strengthening in the negotiating dynamics. Where you've got choice, I started down the route. We've had 7 distressed sales over the years. It's not something that we necessarily advertise. It's just where we think there's an underlying good business, but it's struggling big time, and it's weeks away, maybe a couple of months away from the administrators walking in.
Yeah,
we've taken on 7 transactions, and we've sold all 7.
Yes.
Either to distressed investors that are used to doing this, or a competitor. And we can sell those businesses within 2 months rather than 12 months.
Absolutely. Yeah, it's a different type of
Yeah.
and to be fair, there's going to be more of those.
Yeah.
That's not going to decrease. I saw that Endless had raised, I think was it 300 million or 400 million fund to make the most of the market opportunities, as they very politely say, the market
euphemistically put.
Yeah. And I'm sure all the buyers of, you know, the well-known buyers of distressed businesses are getting ready to do their thing. The Hilcos, you know, the R Capitals, all of these people.
Yeah, and look, there's a place for all of that. And if it means the difference between a company going belly up and a company continuing with some staff and a trade name and a supply chain, then that's got to be a good thing.
Yes. So for the benefit of the listeners, before we started recording the podcast, Rob and I were talking about, I do this 5-day Zoom program, and I didn't realize Rob was mystery shopping me on that to see if I knew.
Came out very well, Jonathan.
Did I do all right?
Very good.
Do I know what I'm talking about? Yeah.
Yes, you do. Time. There's value in it.
And yeah, and I think it's interesting that you are different to many of the people on sell side, where you don't actually just see it from one perspective. You can see it from all sides, which probably actually makes you a very good negotiator, because you know what's coming. Play the other side. You know what's in the buyer's head.
Yeah, and we can share that with our seller client, because we say, look, we've got to go back with a commercially reasoned argument as to why they should pay more.
Yeah.
So it's putting yourself in the other person's shoes, which does give you an advantage. Yeah.
Yeah, it does, doesn't it? Because if you just see it from one side, you don't really know what's going through the other person's head. And I've sold businesses, and that, I think, helps me understand for example, the pressure that a seller feels. Those, you know, that waking up at 3 o'clock in the morning, worrying that the deal might not go through, and not quite believing it until the money's in the bank, and that sort of that anxiety, which I know it hasn't happened so much recently, but right back at the beginning, where that anxiety places me under pressure, and I start to concede on points that I might not have conceded on 3 months earlier. And so actually having that balanced view gives you a way better perspective, doesn't it?
Well, thank you for your kind words. Yeah, it does actually, because it then doesn't become adversarial when you get the buyer and seller together. It becomes a consultancy meeting. If this deal happened, what does life look like after the transaction for both parties? Yes. And so it ceases to be adversarial. It then becomes consultancy. Could 1 and 1 equal 3? You know, does it work? Can't necessarily get everything that you want on one side, but are there enough wins for both parties to make it work? And I've been doing this 20 years. I've had 357 successful deals go over the line, most on the sell side, but not exclusively. I like to think, a bit like you, we kind of know what we're doing until the next new thing comes up. Then we add it to our armory of knowledge.
Rob, you have been a fantastic podcast guest. Thank you for coming on and sharing your advice and wisdom on the sell side of things. And I look forward to doing a deal with you in the future.
Excellent. Likewise. Take care.